Okay, we are live November 11th. Happy Monday, everyone. Hope you had a great weekend. Hopefully, you're either a Bitcoin slash crypto related stock holder or Tesla, because we've been seeing some crazy rallies in the markets. And that's not even talking about AppLovin, which is just as crazy. So we've been seeing a lot of big moves in the market and a true test of the power of the Prospero signals. Matt, I know you have some topics that you want to talk with George about today, so I'll let you introduce them. Good to see you on this fine Monday morning.
Yeah, man, we're going to take a few minutes and talk about, man, just how just crazy accurate Prospero has been over the last few weeks. We're going to talk about AppLovin and how that showed up in our bull screener. Man, gosh, I think all the way back in September we started seeing it. And then that thing has gone parabolic. And then we're talking about Coin and Tesla. And I'm just going to tell my personal story about how I saw both of those begin to creep up in the net option sentiment about a month ago. And I've just made made a lot of money on them. And so I'm so thankful for Prospero and what it's meant for my family. We're just going to talk about those two things and maybe how people can use it themselves.
Yeah, that's awesome. I feel like the power of the signals has never been more clear than right now, especially as we had all these events and the election to be scared of, and the way that the Prospero signals guide everybody through them, and the moves that we're seeing in some of those stocks. And I have some topics around those as well. I want to highlight the Trump trade. Me and George have been talking about how the small cap stocks have kind of been stuck. They'd rally and they'd go back down almost immediately for so long, almost all of this year. It seems like they're finally starting to break out. So we'll discuss why that might be the case. And then we have Tesla, another favorite stock on the stream, crossing a big milestone and rallying just as much as any other company from the election onwards, crossing $1 trillion. But where does it go from here? Are these moves we're seeing in some of these companies that have been so large over the past couple of weeks, are they sustainable, or is this just a market reaction to what happened and we're going to see them calm down? But we'll get into all of those details. Then we have a large drug maker, AbbVie, whose schizophrenia drug failed two trials and is down 12%. And because of that move, another drug maker, Bristol Myers, is up because they're going to be facing less competition now. So we'll discuss what this means for these two companies. It's a pretty large move for like a legacy pharma company to make. So if you're a shareholder in either of those two, how should you be feeling today? Then we have Jerome Powell saying, "I'm the captain now." He was asked at the FOMC meeting last week, "Will you leave if you're asked to leave as the Fed chairman?" And he just straight up said, "No, like I'm not going anywhere." So um, I want to discuss with George. You know, I feel like a lot of people my age and maybe even a little bit older than me don't really know the history of the Fed and how it hasn't always been a thing. And now that there's some rumors going around that they might try to remove the Fed or at least lessen the power going forward, I think it's a good time to discuss the history of the Fed. And then we have Bitcoin, the mighty Bitcoin going higher and higher, and all of the stocks related around crypto and Bitcoin also making crazy moves. The iShares Bitcoin Trust has now surpassed the iShares Gold Trust in AUM. I'll tell you just how much both of those things have assets under management. And also, is this a sign of the times that we're in and it's going to flip back in the near future where, gold, the longstanding, I think they title it the oldest currency in the world, will regain its leadership position, or is Bitcoin flipping it and will never look back? And then at the end of the stream, we're going to do the model portfolio update, which we are now beating the market by over 82% this year, I believe. So you'll want to stick around for that. We do the model portfolio updates basically at the end of every stream. So you'll get to see what we are adding and removing from the portfolio, both bull picks and bear picks, longs and shorts. So you'll want to stick around. Oh, I'm hearing myself in an echo. That's weird. Um, but that's all the topics I have for today. Maybe before, as George getting in here, we'll just look at the QQQ and SPY net option sentiment because we're seeing some strong moves, and let's see if they are reflecting.
We're going much higher this morning. I think last time I checked, QQQ was around 58,
Okay.
and
QQQ net
SPY.
option sentiment is at 56. So it's
Okay,
firmly in a bullish level.
and where's SPY?
And the SPY is at 50. So the
Okay,
SPY is starting to catch up to QQQ.
so for those that are watching that don't understand net option sentiment, basically the idea is that it measures in real time institutional call and put bets. And so we can see in real time what institutions and hedge funds are, whether they're buying calls, whether they're buying puts. For QQQ and SPY specifically, our bullish line is at 40. And so anything that's above 40, we consider bullish. Anything that's below 30, we consider bearish. And so, for example, before the election, you had QQQ, which is the NASDAQ. It was running in the 50s, pretty bullish. You had SPY, net option sentiment, that went all the way down to 0. And so I asked George, what does that mean? Why is that happening? He said, well, what's going on is that institutions are betting that after the election, tech is going to run, and that the SPY, which means they had a bunch of puts in SPY, they're doing that as a hedge in case something crazy happens, in case World War III, in case it's a contested election and the market crashes. People were putting puts in SPY. But then after the election got done and everything went fairly smoothly, they flipped and now gone bullish on the SPY. And so right now, Stephen, we're sitting in a pretty bullish position.
Yeah, it would be tough to see, I think, the market go lower unless we saw not only those signals go down, but something dramatic change in the stock market environment. Because typically November, December, you get the Santa Claus rally, you get a melt up to the year end. So without something happening in the markets, I think it's tough to see a shift. We could see the markets continue higher.
One thing you were talking about Bitcoin that I found super interesting. I'm trying to learn technical analysis. I'm decent at it. I'm not great. But one of the things that's fascinating to me is that when you just look at the chart of Bitcoin for the weekly chart, it's had an upward resistance trend line for, gosh, a couple of years, where Bitcoin keeps bouncing or rejecting rather off of this trend line. Man, it just broke through it and gone to all-time highs. And so it's going to be fascinating to see where we go from here. I mean, really, this is uncharted territory. And so I'm excited to see what's going to happen with Bitcoin.
Well, the thing that is just such a game changer for Bitcoin, I think, is that and if Trump goes through on his word, which is he said back in July at the Tennessee Nashville Bitcoin conference, that the U.S. government will start buying Bitcoin and holding it as a strategic asset. Now, I think the thing that excites a lot of Bitcoin holders from that news, I mean, that's bullish enough as it is. But if the USA starts doing that, why would other countries not follow in their footsteps? They don't want to be seen as losing a race to the USA. So it starts this whole chase for the assets. So we'll see if that comes to fruition over the years. But yeah, it seems like a very bullish time. And even after Bitcoin has gone up so much, it's up another 4% today. I think crossing 85,000. So very bullish time in the world of crypto. Welcome to the stream, George.
Thank you. Sorry, I'm a little late. Thanks for holding me on the fort.
No
We
problem.
did. It was rough, but we pulled through.
We did our best, but we know who the viewers come here for. But I'll let Matt, I'll let you take it away and kick it off today.
Yeah.
I'm sure the viewers were very happy.
Well, George, I'm old, so I'm gonna put on my glasses so I can see your shirt today. Give us the fashion update for this shirt. What's the story, man?
I mean, sometimes I gotta do I gotta bulk purchase these shirts. This is just from TJ Maxx.
Oh, okay.
Not even my favorite pattern, but it's like I don't like to wear them too many times, so I gotta keep a fresh cycle of new shirts coming in.
Man, it looks good. I'm actually going to be in New York this week. I may holler at you. We'll go to dinner. But anyway, hey, man, let's start off talking about App 11. And for those that get the newsletter, our introduction discussed the Prospero filters finding AppLovin. And it ran back on September 15th, if I believe, George, to number 2. And I want to tell you why that got our attention, because George explained to me that whenever a smallish cap company rises in our bull filter, that gets our attention. They have a market capitalization of 37 billion or somewhere around there, which is still a lot of money, but relatively compared to like Tesla, which is currently at $1 trillion, that's not much. And so whenever it rises that far in our bullish screener, that means that something's going down, something's happening, something's causing that smallerish cap to get the attention of institutional investors. And so talk about AppLovin, talk about why that got your attention, and talk about how Prospero saw that before it ever went parabolic.
Well, one of the reasons that I like talking to like retail investors every day is that I can't even, where we got to on AppLovin and where I communicated to you on the smaller cap thing, that wasn't even something that I was aware of until someone on our Discord said, AppLovin's the new SMCI. Mm-hmm. And I thought about that for a second. And for those that don't know, for those that might be newer, SMCI is something that we, that last year, beginning of this year, we had some of our biggest gains on. So it's not the loser that it's become, but we definitely, the signals got us into that and they got us out of that. So that was great. But it wasn't until I thought about that, and when I interact with people, I'm always, I don't just want to say like, yeah, that's right. I want to make sure that I'm giving good feedback on their comments and honest feedback about where Prospero is at. So my first instinct was to be like, they're different for XYZ reasons. But when I thought about it a little bit, I thought that, knowing AppLovin's market cap, when I saw it, I was like, you know what, that is actually pretty similar to SMCI in that, both companies I hadn't heard of before I saw them on Prospero signals, which is important to me always because, the larger mega cap ones, I pretty much know them all at this point. So if I haven't heard of it, inherently, that's going to mean a lot of the time it's a smaller cap company. And we say smaller cap because large cap, they still are, 37 billion, still very much large cap. Just so we're very clear here. But, the way Prospero's signals work, there's elements to the pricing of net option sentiment, upside, things like that, where there's rewards for just how big the pricing disparities, big and consistent, I would say, with calls above versus puts below. So that is kind of like a big, anything could be viewed equally there. However, that consistency point is important because if you don't have enough options traded, you're not going to get those like consistency point awards for the pricing that we look for. But there's other aspects to it that are just looking at, raw dollars going in to the calls and puts because we think that's a way of de-risking. We want to see that separation in dollars as well as pricing to make those metrics, net options, upside, downside, so consistent, right? So it says a lot about how sure the market is on something if you see a $37 billion market cap company get so high in the screener. We obviously pointed out VST. We saw that again this week. VST is also looking good. So yeah, that's something that we will be definitely watching out for going forward, but it wasn't necessarily something we were aware of until we kind of were asked about this pattern or kind of had it pointed out that we do kind of have a way of hitting on these stocks that aren't necessarily in, out there and talked about as much. We kind of can get in before that. And that's because basically what we're seeing is they're being talked about enough, or they're institutions that are in the know enough. There's enough price differentiation. And that's like a big reason why our metrics work a lot better than, say, looking at social media, because by the time they're on social media, institutions have had their run in them. already frequently. It doesn't mean the run's over, but it means a lot of that first run that we could pick up in stocks like SMCI and, app before it, gets into the social media. And app, obviously with that big gain, there's a lot more chatter about it now. But, basically they had this incredible earnings. And, what we're basically seeing in Prospero is that there was institutions that, very much expected or maybe even knew how good that earnings was going to be. So that's why we focus on those options bets.
Man, George, for folks that are maybe new, explain to them, because I've seen a couple of questions on this. How can they get that pick from you? Obviously it showed up in our bullish screener, but how can they find it? How can they get it from you? Just talk quickly about that.
Yeah. So, there's first of all, there's two letters, and I saw someone. It's a good point. I should get back to that person on Substack. Right. There's first of all two letters: the trading letter and the investing letter. The trading letter is going to be much more, kind of our automated strategies, pure signal. Investing letter is going to combine more of, kind of my value investing background in addition to our signals and some thoughtful nature about, especially the portfolio management in a given market. And then those will get you. So the letter will get you what's ever live going into the week. And then there's the paid investing add-on, and that will get you our midweek updates, which app was one of them. So if you're not paying for the investing letter add-on, you might actually be missing a lot of these portfolio updates midweek. But, that's kind of thoughtful in terms of how we do it, because for some people, especially people that, $10 a month is out of their budget, which is the investing letter, then maybe it is better to look at it on like a 1 week frequency, and you don't really need the higher frequency midweek updates. But yeah, there's certainly different ways to follow. But what I always say is we're not really asking for anyone to follow us. These are both portfolios are just how we would demonstrate different strategies with the signals. They're not meant to be copy trading. And philosophically, we actually think copy trading is not the right way to learn, and a lot of the times pretty scammy. We advocate learning how to harness the signals and building your own process, not necessarily trying to follow either of our portfolios.
Yeah, and to that point, for those of y'all that are listening, I have another job. I work full time for a nonprofit in Georgia, and live in Texas. But anyway, so I'm kind of a swing trader, and I have the time to look at my trading app multiple times a day, probably 5 or 6 times a day in between meetings. And so what I've done is I've learned the process of using Prospero. I don't depend on George to feed me the picks, but I've learned how to use it myself. And I want to just tell you a quick story of how I personally used our research at Prospero, and then I watched the numbers throughout the course of about a month, and then made some decisions that were really good one. And that's coming up into the election. And so for those of you that read our newsletter, you know that coming into the election, DJT, which is the Trump proxy stock, was just going bananas. And George came out in a Fortune magazine article, George?
Yeah. Well, it was Fortune and then CNN. There was a lot.
and they made it sort of sound like you were saying that if you that Trump investors were dumb, which is not at all what you were saying. What you were articulating is it's probably not wise to jump into DJT right now based on the valuation. And so as we entered into the election, the final week, a couple things were happening. Again, SPY net option sentiment was at 0. I mean, it was very low. Institutions were hedging with that. But at the same time, QQQ was really high. And when we wrote, I believe it's our last letter right before the election, we said, look, we think there's going to be a sell the news event for DJT. And we think it probably can drop, even though it's gone up so much. And the other thing he said is, based on what we're seeing in net option sentiment, if you're going to play this volatile election thing, we would suggest coin and Tesla. I personally, I wrote the letter, but I look back at that. I had been watching Coin and Tesla for quite a while. I noticed, good grief, George, it was probably a month and a half ago. Coin was pegged out at 100 net option sentiment, and at times it had 100 upside. And so I saw that a month and a half ago, and I bought calls on long-term calls on Coin, and then Tesla did the same thing, and it was showing high net option sentiment, and so I bought calls on Tesla, back even before we made those calls. 2 points, and I'll shut up. Number one, the election happened, and sure enough, I'm looking at the numbers because we have a Trump tracker, and DJT since is it from the election or from when we made the call, George?
From when we wrote the letter saying that we would take Tesla or coin over DJT going into the election.
Right.
So 10/28.
Yeah. So from that date, DJT is down negative 22.05%. Tesla is up 29.39%, and Coin is up a whopping 48.77%. Since we made those calls. Those are pretty crazy numbers. And just to tell you how I used it personally, again, before we made that call on the newsletter, I saw those two stocks and their net option sentiment. I bought calls, and George, I'll just go ahead and share with everybody just for practical stuff because I'm no expert. But I started with a $4,000 account in Robinhood, and just on those two calls alone, I'm at 20,000 and today. And that is purely because of what I saw on Prospero. And so, George, first of all, man, thank you. I don't think you get enough thanks for helping guys like me. Man, I had to pay for 2 weddings this summer, and so I'm super poor. And so, brother, thank you for that. My wife thanks you too. And but man, talk about, like, is Prospero getting more accurate as we go? Just talk about what you're seeing, and are we getting better? Just unpack how what you're seeing happening in the app itself, and how accurate it is.
So I think we often say, like, practice what you preach around here, and I think it's really as simple as the longer you're around these signals, the longer I'm around these signals, the signals have stayed the same. They haven't changed, right? Their construction. And that was something like a while ago. We said, you know what? We think that instead of like continuing to improve on things, we're better off keeping them consistent because we like where they are. We like the performance, right? So I would say what we're seeing is, I'm getting better at, unearthing things with like momentum score. That process is improving, and momentum score is just a wrapper around various metrics that combines them. We have things like technical flow that should be going in the app in the not too distant future. So there's been some improvements in terms of the breadth of the signals, but a lot of it is just kind of what you're saying. And I would say understanding where conviction is. And it's what we say, like, the longer I'm around them and I can kind of see some patterns repeat, or little things like, upside and net option sentiment being at 100. We've only really ever seen that with Meta, going into some of its great runs. And so, that's something that, now when we see that, and especially when we see it kind of happening in a sustained period, that's about as big of a bull signal as we can see. And, it's playing out again with Coinbase to occupy both of those positions. It's difficult to keep both those positions. It means the market is really, really bullish on you, and institutions are. So, I think that that's the powerful thing. And that's, that's one of the reasons that we also don't tinker too much. I mean, I think we're going to go through an enhancement of some of the signals after we close our round. So that'll be the first time. And, part of what we're doing along that is we have a whole new testing framework to make sure that what we're putting in is really, really better. And we've actually been using that testing framework leading into making some tweaks to a few of them. Upside and downside are going to be the main ones. We don't really have any plans on net option sentiment. But, I think the big thing there is just that because we haven't really tinkered much, that allows us to say, the signals haven't really changed much, right? So it's the process that's improving, and it's the way we use the signals that has really helped.
Yeah,
Good to see that, Gilbert. I appreciate. I guess Matt pushed you to do that, but yeah, we love to hear that. We can never hear that enough. There's just so much out there, we think, that is leading retail investors in the right direction, and people figuring out how to harness it and making good moves for them where they can see some great gains. That's what we want to hear.
Yeah, and for those of you that are new to the app, I encourage you to go to the watch list, find the stocks that you want to watch, learn their specific patterns in Prospero. And when there's a big move up and down and they get out of their normal patterns, you know that a big move is probably about to happen. Hey, George, man, thank you so much. Stephen, thank you so much for having me. I got to get back to work. Hope you guys have a great day.
Thanks, Matt.
Bye bye.
Thanks for joining, Matt, and sharing that that story. That was great to hear, and great to see all the comments today. Happy Gilbert is enjoying our signals and everything that's been going on in the markets. It's been quite a week and about a week for us now, George. The market has been rallying ever since the election took place. One of the things I want to follow up with for the AppLovin story is to just dive into kind of the signals just in depth, because when I see a stock now that's, just put an arbitrary number, say under 100 billion in market cap, but just emphasizing a smaller-ish company, when I see that rank highly in the signals now, I become so confident. And I'm wondering, are the signals for net options sentiment specifically, are they tracking the net total call buying volume? So like if AppLovin ranks at 100, is its total net options calls outstanding bigger than a company like Apple, which is why the signals would be so powerful then, because you have this small company with even more volume than Apple in that direction? Or is it something else? Because I've just seen it time and time again where like a smaller company, and it's not like Apple, like if it had 100 net option sentiment, wouldn't go up, but these smaller companies seem to have volatile moves to upside more so than the bigger ones do. So can you just break it down and explain that so we can better understand it?
So yeah, the bulk of net option sentiment, and on given days there can be some slight differences to the weightings, but the bulk of it is pricing disparities and consistency in pricing disparities. So looking at contracts and how calls above are priced like higher than puts below to get higher net option sentiment. But some of it is actually just raw open interest, right? There's a lot of different elements to it. So yeah, we do we do think that insulates us from risk more, right? Because at the end of the day, you could have pricing a lot of companies that are priced maybe slightly higher to the call side, right? And in things like that, we care a lot more if they're priced slightly higher, but there's a lot more contracts outstanding above or below, right? Because that also just means there's more money betting on something. Pricing doesn't necessarily mean volume or money outstanding on a contract. And that can work in two different ways, right? It could mean that if there's a lot of contracts, but the pricing isn't a lot higher calls versus puts, it could actually mean that it could actually mean a warning sign for even larger companies that the market really isn't as bullish on it. There might just be that, volume. But I've also seen it work in the other direction on a lot of meme stocks where I've seen tons of open interest in calls above puts, but actually the pricing, the puts are actually priced more attractively or priced more dictating a fall than otherwise. So I've seen it work both ways, and that's why we use both elements for risk analysis, right? We want to see that pricing above and net above and consistently above, but then we also want to see the number of contracts above and more above than below, and that in terms of number is really going to weight more towards large and mega caps, just because they can get that distance. For example, you could have a company that has 1 million calls above and 800,000 puts below, is going to be ranked better. That's like a net 200K is going to be ranked better than one with 200,000 calls and 100,000 puts in that area, even though it's 2-to-1 call to put, right? For that metric, we care that net, there's just a bigger quantity of contracts in that area of net option sentiment.
And I see our question from Jonathan, which I'll get to in a second. And I just want to follow up and ask, like, did you have a lot of iterations on making this net option sentiment and all the signals, but specifically net option sentiment, like the signal that it is today? Did you go through trial and error? And how did you even come about the idea of tracking options in this way? Yeah.
A lot of trial, a lot of trial and error. In terms of what works, like for those that don't know the entire history of Prospero, we're 5 years in, but we're only about a little over 3 years. I hard to remember. Maybe it's 3. I think it's 2. 2 years into like really the public facing Prospero. But the 3 years before that, I was the main user of, and I'm also the chief data scientist. So basically what was happening was I was using Prospero and, especially things like net option sentiment. And I had to be able to make decisions purely using the signals. And that really helped me evolve the signals and get them better and learn what was working, what wasn't. So there was a trial and error. But the funny story that I've told sometimes about net option sentiment, there was a time earlier on when we were actually more focused on making pure recommendations. And we actually switched. One of the things that ended up happening was I teach a lot of retail investors one-on-one. And I was teaching people how to read options chains a lot, and it was just terrible. It didn't go well. And there was one day where I finally said to someone, what if I told you the options market's like this or didn't like it? And they said, well, it would be a lot easier. We'd be saving a lot of time if you could do that. And I was like, great. I never want to teach anyone an options chain again. And I haven't had to. I got to work on net option sentiment. So that's like, I think the two important parts about Prospero. There's this connection with retail investors where we need to be able to communicate it and making it easier to them. And then there's kind of like our dedication to creating something quality by using it and having other people use it and get that feedback. So it was a bit of a long road, but truthfully, before I had this experience, I wasn't even thinking about creating a net option sentiment. That was something that, it's always important to, try to hear what other people need, because I didn't really need a net option sentiment. A lot of the times I could look at options chains and get that same information. And that's why I said, what if I told you the options market's like this or didn't like it? But net option sentiment was something that now is way faster. I'm glad I don't have to look at options chains. And B, if you don't really know how to do that, it's a lifesaver. But that's kind of how we arrive at everything. We iterate.
No, yeah, it's cool to hear the backstory for it. And Jonathan is wondering, even though you're not a big fan of Robinhood, is it time to start investing in it? Upside is at 90 and net option sentiment has been increasing. And just piggybacking off that comment, if there is a stock that has fantastic signals in an area of the market that you don't like, some people don't like to trade off morals. How do you feel about that as an investor? You'd like to take
I
that
mean,
out and just invest off numbers?
I can't condone it. I can't. I think I think it's just one of the like I think there's a lot of people that complain about corruption and everything in the market. And then do things like use Robinhood. When Robinhood, I think, is one of the worst forces in the market at making things a scam or corruption or whatever thing you want to use. So I can't support what they're doing. And it's sad that people are kind of forgetting about everything that's happened. And I know using their product is easy, but I can't recommend it. It's doing very bad things for the market. Their 24-hour thing is bullshit. It just allows people to manipulate the market more. They're going to be doing a lot more things. I think they're going to start. I think they have like an AI component. I think they're going to start rolling out like sports betting. It's it's all of the darkest things in one place. People shouldn't use Robinhood. People shouldn't
And
use Robinhood. They shouldn't buy Robinhood stock. I wouldn't. That's my
you know Dave Portnoy, George?
what?
Do you know Dave Portnoy, the Barstool
Yeah,
CEO?
of course. Yeah.
So he has this thing where he puts his enemies' names on champagne bottles. I think maybe you need a Robinhood champagne bottle. It's
Why does
just
he put his enemies' names on champagne bottles?
because he's just a weirdo. It's funny. He pops it if like something goes wrong with one of them. But we need to get George
Oh.
A Robin Hood champagne bottle, and
I
we'll pop
mean,
it
the
one day.
problem is I can't really celebrate too much because like, you know, there's so many things that have happened to them that should have killed them. Like, but they just people forget and then they're just like, "Oh, it's easy to use, it's a good interface." And they forget, how much they screwed retail investors.
Okay, so what I want to talk about now is we've had so many big moves take place in the market. One area of the market that we discussed for a while that could just never see a continued rally was small cap stocks. It seems like now maybe the narrative is changing. There was a story about how they've seen the biggest inflows in small cap ETFs since 2007, over 3.9 billion worth. So was this change in administration and regulatory environment the thing that small caps needed to finally, be able to have a sustained rally?
Yeah, I mean, I think it's just like overall bullishness and people assuming that, because the market is bullish overall, it's going to result in, small cap wins. I don't really love, like, for reasons I talked about in like a recent newsletter, I don't really love um small caps relative to larger cap things. I just think the risk reward you're getting is not the same. And I think like, with the way technology is going and companies can accelerate using that technology and just spend more on R&D, I just think you're in better hands in these mega caps. But yeah, I think you could see big gains on small caps, bigger gains than large caps, but I don't think you'll see better risk adjusted gains. And I think that's tough for a lot of newer investors because they're just like, well, I want to go where the biggest gain is, but you can get that gain without understanding that you might have had like narrow misses on on certain situations where there were downsides that just didn't end up happening and you only saw the upside. So that's why we're always trying to manage risk. And I think the best way to manage risk continues to be, large cap growth. We're diversifying into smaller cap a little bit more, but I just still think large cap growth is where you're going to continue to see the best stocks, risk
Hmm.
reward.
So then I think this next stock would fit in that category. So I want to talk about Tesla now. Two streams ago, I said, can Tesla hit an all-time high in the next 4 years? Last stream, I said, can it be next year? I think we need to move it up to this year. The crazy upside move that we've seen in Tesla, just day after day, moving 10% higher and higher. I believe it's within 20% of its all-time high now. It crossed a major milestone of $1 trillion in market cap. How are you feeling about Tesla after this big upside move that we've had, and what's going to happen at the end of the year? Are we going to get a new all-time high?
Yeah, I mean, I think I think if this was just kind of momentum, we'd be talking about it like more similarly to how we talked about DJT, right? And I do think there's some just like momentum to this, but I do think there's legitimate reasons to be excited. Like I think Elon Musk and Donald Trump are, very close. And what I've always said about Elon Musk is even before he like, became like in the inner circle of a president, he was always good at kind of like greasing the policy wheels for his businesses. For people that don't really know, like the big example is like he figured out a way to go direct to consumer with Teslas when no like car brand has had that for like a very, very long time. I don't even know how long. So, you know, he's good at that. Like same with things like SpaceX, Starlink. Starlink especially. He got, especially with the what was going on with Ukraine. He got very involved with the government along Starlink and what was happening there. So he does know how to put himself in the right position there. And I think a big reason that he, is betting on Trump is because I think, him and Trump are, have plans to do things with full self-driving, right? I think that could be, a big differentiator in terms of, a lot of our infrastructure is not doing well, and this doesn't fix the problem. But, I think there could be, especially in cities with a lot of traffic, if you start to get a lot more full self-driving, you get, better moving transportation. A lot of traffic is just people being dumb. So I think this could be a potential exciting thing about a Trump presidency. I think, I think self-driving cars are something that I've been interested in for a long time. And I think betting on that and the revenue and Tesla kind of having an inside track on especially regulation, like that's the thing about buddying up to a president. Imagine if Teslas have the only licenses for these. That's just going to be huge for the demand for their cars, huge for the stock price. You could even see governments buying Teslas if they're the only ones with the other licenses and they just want like taxis in their cities that are full self-driving. I don't necessarily think all those things are going to happen, but even an announcement around that could be huge. Like just that they intend to make self-driving legal. Like Trump could say that at any point.
Billy Boone, we are going to get to Bitcoin on this stream, so stick around. But I want to follow up on Tesla. So, with the NVIDIA AI bull case that happened over the past couple of years, where it went from like a couple hundred billion market cap company to the largest in the world, could Tesla go on a similar run if this self-driving bull thesis comes to fruition? And I mean, self-driving is kind of like a sidestep of AI, right? Like it's kind of hand in hand. So, can Tesla benefit from this AI self-driving wave also, where they're going to be in that competition to be the largest company in the world very soon?
Well, you got to be careful. Like XAI is raising money, right? So we don't really know how much of Elon's best AI ideas are even going to go into Tesla or how that's going to shake out. So I'd say that's a concern. But if it does, it shouldn't. There's just not an equivalent there's not really an equivalent of um NVIDIA GPUs and their differentiator. Like these cars could be huge and the car sales could be huge, but I don't think the valuation would justify it. If XAI didn't exist and you could say there was going to be a lot a lot of AI products coming out of Tesla without this like unknown, I might say that's a little more realistic, but the fact is it does exist. And I don't see that kind of revenue for Tesla is the big issue.
So I want to spin now to a large pharma company called AbbVie. They had a schizophrenia drug get it actually failed 2 trials and it sent the stock down 12% today, which I was a little surprised by because AbbVie is like a $300 billion company. So to see a move like that was a little bit alarming. But then on the other side of that, Bristol Myers Squibb, which is another large pharma company in about $125 billion range, was up 11% off this news because they have a schizophrenia drug that is now no longer going to get that competition, it looks like. So, how would you feel as a shareholder of both of these companies? I think specifically AbbVie, the fact that one drug failing can move them 12% has to be a little bit concerning. No?
Yeah, I mean, I think the big thing is what we always say with with pharma, biotech, everything like that is you're always one of these announcements away from this happening, and um they really impact the stock. Now, when you look at valuing these, right, you might say AbbVie, like, oh, they might end up figuring out how to make the drug and it's just getting hit too hard, like, because these things just go in both directions. But I think that's what's so hard about, owning, anything in healthcare or biotech. So my answer would be if net option sentiment is looking good on these, then I'd like them. But, outside of Eli Lilly, you really don't see, UNH has some runs, but it's pretty quickly to get down to lower net option sentiment. Outside of, Eli Lilly, I haven't really seen companies that like keep that kind of like elite net option sentiment rating. We obviously took like McKesson for a ride last week, but we got out of it because we thought we saw some like softening in net option sentiment. And it's just very hard to maintain those high levels.
Okay, so last week there was a Fed meeting. You might have missed it because there was so much going on in the market. It kind of got swept under the rug, I feel like. But Jerome Powell was asked point blank, if you were asked by Donald Trump to give up your Fed chair seat, would you do that? And he said, "No, I'm the captain now. I'm not leaving." But I think this is a good opportunity to kind of talk about the history of the Fed a bit because I was unaware that the Fed hasn't always been a thing and that it was made by Congress. Because I'm seeing a lot of people talking about now the possibly removing the Fed and how likely is that. And then they were also kind of throwing the Fed under the bus. I feel like a little bit because I don't know. Could they have done a better job with all the government spending and COVID and everything that's happened in the past couple of years? The way that they've had the stock market go up doesn't seem like they've done that bad of a job. But so how are you feeling about all that and the Fed situation?
Well, I think the risk, and I think I would think it would be funny to see Sam Bankman-Fried as a candidate for the internal position if Trump got rid of the Fed. Just a crazy friendly Bitcoin thing. But what I will say about the Fed, and I think the danger that we're looking at, if there's significant changes to the government as we're seeing, is the Fed's independent. And they're, it's kind of what you look at in history where, monarchs have been some of the best and some of the worst, and sometimes both in terms of leaders, because the more power you're concentrating in one area, the the easier it is to do things. And if you have good plans, that helps. But what I will say about the Fed and what I don't necessarily think the concentration of power is good. I think having an independent Fed, and that was one of the things that's good about it, is an important factor in making sure that you're not having, I would say, too short term of a view on um, on economics. Because while the stock market, for example, did rally in the last Trump presidency, there was a lot of handouts to people with the with COVID. There were tax cuts, and in this cycle, 51% of the cycle, the inflationary cycle, was due to corporate profits right after corporate tax cuts, right? And I think that can be the harm in looking very short term. And that's my biggest worry in even seeing this rally going in, that it might be good in the short term, but we might be paying the piper in other ways down the line, because there's very real things that we have to fix. And I hope if we get rid of the Fed or if anything like that, there's good policy that creates lasting improvements. But I think that's a real danger when you take out like something like an independent Fed, because an independent Fed can, I think, a lot of times, because they don't have to worry about elections and they're supposed to be independent, they are an important counterbalance in an administration that might just want to create the best situation in the short term to create the best chance of reelection.
Do you think an AI Fed chairman will ever happen one day? I mean, I'd imagine that an AI can be unbiased in the best way possible and look at data, um, unbiasedly that it's going to make the best decision more so than a person. So, what do you think?
Um, Assuming that you don't have corruption involved, which you always could, or having people making alternative reasons, like everything we do at Prospero is we use advanced technology and then have a human check it in the end. Computers, I don't think computers can see the whole field quite yet. So I think it's a mistake to start talking about that kind of thing. and I think see the whole field is a good analogy, right? Because if you think about like maybe like a baseball thing where it's just like they clearly should be calling balls and strikes, right? You see it on TV and it's maddening how bad some of these calls are. But if you start saying like could an AI like manage a game? Like yeah, better than some managers, but I don't think better than the best managers who can go out and talk to their pitcher or like, like who actually know their players and know like maybe their mental state. That's far beyond just where the numbers go. So I think that that's an example of where we're not quite there yet, and where just like some human to human things are important. But I do think that like AI is putting um the right metrics and data in the hands of smart people is going to be the best thing for a while. And I talk about that all the time when some people ask me if we're like fully automated or anything like that. And it's just like, no, because like I know what's going on in the macro economy much better than a computer does. And that's not going to be, and computers just don't understand like geopolitical situations, things like that. They won't be there yet. They will be there like eventually, but not anytime soon.
So still a long way to go. Your job is safe for now, Jerome Powell. I see in the comments we had a lot of Bitcoin bulls, it looks like. We got some price predictions for the end of 2024, 100K from Billy Boone, 180K from Topher, over a double. That would be crazy to see. But, we've had a crazy week in the world of crypto and Bitcoin. The iShares Bitcoin Trust, IBIT, is now bigger than its gold counterpart in AUM of the iShares. So the Bitcoin one is 34.3 billion AUM, and the gold one is 33 billion. Did you ever think you'd see that day come true, George? And if so, this quickly, where you have a Bitcoin ETF that's now larger than a gold one?
Yeah, I mean, I think what I've always said about cryptocurrencies, blockchain, and everything like that is like that blockchain's here to stay. Cryptocurrencies are tough because, for example, Bitcoin is priced to win, right? And we don't necessarily know if it's going to win, right? Um, and if you look at something even like Ethereum, I think some engineers that I know that are sharp say that's not even going to be the best solution in terms of just like efficiency, speed. Um, so there's things that need to play out there. But that's why, I mean, but it was always bullish long term. The question that I always had was, you know, is there enough clarity on, say, where the options markets are in a volatile market to know that you're timing it right versus some of the other things that we time right in the stock market and get huge gains? Relative value question for us there. But also, that's why we like something like Coin above any of the individual Coinbase, above any of the individual coins, right? Because if you look at it, that has gained, since we first got into it, way more than Bitcoin percentage wise. And you're also getting way less risk. You're not getting the individual cryptocurrency risk. You're not getting the non-transparent options markets risk where you don't necessarily know exactly where the options players are, because we do have the options visibility in Coinbase that we don't have in Bitcoin. And so, yeah, I think that like little things like that are really important, and you still have to care about risk reward. But I think especially with this administration, a lot of the risks have been removed.
So Billy commented that AUM, which is the gold one, started in 2003, and IBIT started in 2024. Just for reference for everyone watching, and we will be doing our switch over right after this topic. So if you guys have any more questions, feel free to comment them before we do it. But I think I was telling this to Matt before you joined the stream, and we were going through kind of the Bitcoin maximalist like bull case theory, and I want to ask it to you now and see how you feel about it, how likely it is to come true. So, I think the biggest thing that people who are in the Bitcoin bull camp think is going to come true over the coming years is now that Trump is elected and the USA if what he said in July comes true, will start buying Bitcoin, holding it as a strategic asset. If the USA is doing that, how can other countries not start to do that as well? They'll start to feel like they're falling behind. If the USA, being the leader in the space, is doing it, like they will start to do it too. So if you have countries one by one starting to follow what the USA is now leading in, and all countries around the world are holding Bitcoin as a strategic asset, I think the price goes pretty crazy if that comes true. So, how do you think that's a likely thing to happen if the USA, and it looks probable, starts buying Bitcoin? And I don't know
And
what's
it's an
the
interesting
total.
thing. If we're getting on the ground floor about buying a lot of Bitcoin, talk about something that could take us out of our debt problems, right? If we do that successfully. But I think the other side to it is we're kind of also devaluing the dollar, right? Because like the dollar used to be the reserve currency. And if people are, say dropping the dollar and we're dropping our own dollars to buy Bitcoin, we could be devaluing our currency. Now that's not necessarily the case, but it certainly is a risk. And a risk in any country starting to pursue that kind of policy, right? Because owning your own currency is the best way to keep it strong. And if companies buy into this, which I mean, if countries buy into this, which I think they could, but I'm not sure of the extent. Then you're kind of everybody in a certain way are kind of agreeing to this like non-national currency that um, that kind of makes it harder to have economic control, right? Because a big thing about a lot of the world using your currency is you can do things to change the value of it that suit your broad macroeconomic policy. And especially if we buy into this and a lot of other countries do, we lose that control.
But I think like the control for governments is good, but for people, is it good? Because it seems like every country's currency just gets inflated away eventually. Um, so if there's a currency outside of a government control, and it seems like throughout history, governments have monopolies over things and lose them over time. And then if that's the case and Bitcoin is now $1 trillion asset, what is the total market cap you could possibly, reach if it becomes a currency that is widely used throughout the world? It's just, I feel like the numbers get kind of crazy.
Yeah. I mean, I think it could get crazy, and I think this is going to be a big bullish, like Trump winning is going to be a big bullish event, and it's like one of those things that, yeah, like a lot of it is perceived value, right? And if the perceived value is going up, that can create, that could create a not only a lot of basically a big demand spike could drive up the price, and a lot of it is like could build on itself because if the demand is there it also spirals up the perception of the growth and demand and how many people are going to use it. So it could be a very interesting next 4 years.
Yeah, we'll have to watch it all play out, but the time is now to do our switch over. We are going to do the model portfolio update, which everybody should stick around and watch, but George will be with you on the other side. Okay, George is gone. Well, he'll be back in a moment for everyone that is here. Thank you all for tuning into the stream today. Let's try to get to double-digit likes on YouTube. We are only 2 away. We are at 8 right now. So let's hit our 10 double-digit like goal for the stream today. Hopefully you all love the topics that we discussed on the stream today, and also the signals that have been kind of killing it in Prospero, if we're not going to toot our own horn too much. Let me do a live look at the markets right now. Thank you for commenting, Billy Boone. You seem to be a Bitcoin bull. Nice to see you in here, brother. Let's see. IWM is up 1.7% today. It is the leader across the indices. So we are seeing that trend continue where the small cap stocks have a consistent buyer. The Dow Jones is up 1/8%. The SPY is up 1/4%. And the QQQ is actually slightly negative on the day. So maybe a little bit of calming going on amongst a lot of the stocks that have moved a lot over the course of the last week. And let's make sure that the QQQ and SPY have not changed in their net option sentiment levels, which we checked on in the beginning of the stream. They were both in the 50s, which is bullish levels. If you're new to Prospero and our signals, for SPY and QQQ, it's how we track overall whether the market is in a bullish or a bearish feeling. QQQ typically high 40s, 50s, and above is a bullish area for QQQ to be in. SPY, I would say most of the time, is slightly under the QQQ in its net rating. Definitely recently it has been. So let's take a look. The QQQ is at 55 in net options sentiment, and the SPY is at 48. So they are both still in the bull zone. And it's nice to see that the SPY has now come back. There was a gap of about 20 points for some time between the QQQ and the SPY, and it's now closing that gap. So looks like it's being confirmed that we will get a end of the year rally.
All right. I don't know if I can hear you.
Oh, hello, you got me?
Yep.
Okay, so we checked in on QQQ and SPY. What is interesting to note today is that the SPY is, the QQQ is slightly red, but the IWM is up 1.6%. So we're seeing kind of a continuation in that dynamic we were talking about on stream today.
What are the SPY? What are the numbers?
QQQ is 55 and SPY is 48.
Well, a little dip. Let's share. Nice little run in both of our portfolios. Okay. Okay.
The market is having a little hangover today versus the big bull moves last week, but not the small cap. QQQ net option sentiment is at 55 and SPY is at 48. They're a little lower, but not a big enough move to change our strategy much. Consumer discretionary has been, to a bit of my surprise, the biggest, most consistent Trump winner. could be because these stocks are starting to get a hit based on spending decisions and expect spending from this administration to support ongoing spending.
Oh, interesting. Arc up there, but
I lost you for a second.
we're not
You're
there.
back though.
Look at Mara and Riot. We'll do. GME. Yeah, why not? We'll do that too. We'll get rid of it if it falls. All right, we'll do one. I mean, those are decent numbers. Oh, shoot. Well, we're going to have to start this over. I didn't paste the rest.
Ah, good catch.
I've done that before. Will we make the same decisions? That would be funny. No, we're not. Right. Can't do Robinhood. Gotta stick to my my beliefs on this one.
We need Vlad Tenev and George Kalis on Joe Rogan debate.
He wouldn't stand a chance. Okay, we're gonna look larger. NVS. Man, what's going on with healthcare? I don't want to get so overweight Bitcoin. All right, no, I have Mara. I think that's all. That's all we're doing. I'm also going to do this. Sorry, not highlighted. All right, now. Portfolio starting to get bigger again. Man, we are really low on this. Okay. All right, any questions?
No questions right now, although we had great comments throughout the stream. So thank you all for commenting away. But I think that'll do it for today. We will be back Wednesday at 3 p.m. Eastern to catch up on everything that's going on in the market. But until then, have a good couple of days, everybody. Hopefully your investing goes well.
Thank
See you,
you.
George.
Bye.